Chalo, we're back. In this particular recording, we're going to discuss about chapter 3, not chapter 4. We'll do chapter 3 first because you guys are fresh in the morning, right? We'll do with chapter 3. Chapter 3 is a little, I would say the most difficult chapter, I would say, of audit. Taken up. We'll do chapter 3 quick revision and then we'll jump onto chapter 4 and we'll do the rest of the essays. Is that okay? Take it. What is chapter 3? Risk assessment and internal control. One of the, I would say, heart of our audit syllabus. Taken up. Because after doing 1 to 11, taken up, which is all about base. Because chapter 1 talks about basics, 11 talks about ethics, 2 talks about just planning and strategy. Now, actually, we are going to talk about key, what is an entity, how do we proceed, what are those things. Taken up. This chapter comes around 12 to 15 marks in every attempt. Taken up. Kind of a difficult chapter to remember, but after completing the entire chapter, I'm just going to give you a few areas which you're supposed to focus more on. Taken up. But don't expect me to tell key what are those important questions. This is ICI, not school 12 standard 11 standard examination. Take it. I generally break this chapter into multiple parts. Taken. I would tell you as and when I move on. Taken. So the first part of the chapter is audit risk, which goes on for 8 to 10 pages. Taken. Easy topic. Too much of RMN is there, and good amount of mug is also there. But easy topic. Taken. What is audit risk? If you see, audit risk is a risk that the auditor might give an dash opinion, inappropriate opinion, when the financial statements are materially misstated. So if you remember, there are multiple types of opinions which an auditor can give. Do you know what is it? First one, it is called as unmodified opinion, which is nothing but the clean opinion where everything is true and fair. Then comes qualified opinion, then comes adverse opinion, and then comes disclaimer of opinion. Okay. So this 2 lines you're supposed to mug thoroughly, these 2 lines, because this is the definition of audit risk. It says risk that the auditor might give an dash opinion, inappropriate opinion, when the financial statements are materially misstated. That means there is some material misstatement in the FS, but auditor has not identified it and he has given a unmodified opinion. That means he was supposed to give a qualified adverse disclaimer, but he gave an unmodified opinion. Or he was supposed to give an adverse opinion, but he gave a qualified opinion. Majorly, we talk from the perspective of he was supposed to give some kind of modified opinion, but he gave an unmodified opinion. This kind of risk is called as audit risk. Understood? Yeah. So this 2 line you are supposed to mark. Rest everything is pure RMN. The last line is an important line. Now you tell me, why is there a risk called as audit risk? Why is there a chance that auditor can give an inappropriate opinion? Because there are 3 reasons to it. There are how many reasons to it? 3 reasons to it. Because of that only audit risk. What are those 3 reasons? Simple 3 risk: inherent risk, control risk, detection risk. That is why we say audit risk is a function of ROMM and detection risk. But you're going to learn further. You would be knowing ROMM is a function of inherent risk and control risk. Am I right? So audit risk indirectly is a function of inherent risk, control risk, detection risk. Because of these 3 risks, there is always an audit risk. Okay, that auditor might give an inappropriate opinion. Understood? Okay, I'll just read this paragraph. It means that an auditor expresses an unmodified opinion when the financial statements are materially misstated. In such a case, not only the reputation of auditor would be damaged, but he could also invite regulatory actions from professional body, that is nothing but ICI, and could also face probable legal action by intended users. Array auditor, you are an auditor, you are a chartered accountant, you must use due diligence while doing an audit. See, few things which are covered under inherent limitations, that is okay, but that is also you have to prove through your documentation. Understood? Tomorrow, if where you were supposed to give a modified opinion, but you gave an unmodified opinion, and tomorrow they find it was a very negligent mistake done by you, ICI is going to take action on you only. I told you, no, if there is something which is happening in the company, the first person who is caught, whose collar is caught, is auditor. Okay, why? What did you do? Industrial Bank, it is going under some fraud only currently. Industrial Bank, last 2 weeks back it came. This amount of financial statements misstatement is there. First person who is called, what? ICI took out a notification. We are going to probe into what the auditors of that particular financial year did. They are not interested in what bank. First they wanted to check what auditor did. Because financial statements are made by management. Who checked it? Auditor. What did you check then? Because the amount of fraud is somewhere around 20,000 crores. 20,000 crores. Was it 20,000 crores or 2,100 crores? Somewhere in thousands only. Either 2,100 crores or 21,000 crores. Either of them. Understood? So to avoid such consequences, please plan and perform an audit properly according to the essays. Just remember, audit risk is a function of ROMM and detection risk. Below this ROMM, draw 2 bifurcations, like 2 points below this ROMM, like this, 2 arrow marks, and one right inherent risk, second right control risk. One is inherent risk and one is control risk. Today we are supposed to do it quickly. Taken up. We'll stick to it like a marathon only, not like a detailed class. Next, the meaning of this ROMM, which we are coming across, risk of material misstatement. What is this risk of material misstatement? I break down the entire word. There is a misstatement, which is a material one, and there is a risk that that misstatement is there in the financial statements. Same thing. See, there is a probability that there is a fraud or error in the financial statements. Just broke down the word, no? Misstatement, which could be material, taken up, and there is a risk. What risk? That it might be in the financial statements. And misstatement are due to only two reasons, either fraud or error. Same thing. So there is a probability that fraud or error in the financial statements are there before the audit. What is the meaning of misstatements? First, explaining it in layman's language. Layman's language, difference between actual and standard. Difference between actual and standard. Now telling what they are telling. It is the difference between the amount, the classification, the disclosure. What difference between the amount, the classification and disclosure between a reported financial statement item, which is nothing but the actual. You can underline and write actual. Reported financial statement is nothing but the actual, and that is required for the item to be in accordance with IFRS. This is nothing but the standard. See, if there is a repair and maintenance taken up, and if that repair and maintenance is like of petty nature, we take it to P&L or capitalize with the machinery. Take it to the P&L. If it is of that nature which is improving the life of the asset, then we capitalize it. For example, it was an item which was supposed to go to the P&L, but you debited the capitalize it. Then it is wrong. It is a misstatement. Correct or not? Because classification error. You were supposed to classify into P&L. You classify into balance sheet. For example, cash balance. There was a sale. Sale invoice of 1 lakh. While doing typo error, you press one more zero. 10 lakh. It is a misstatement. What was the actual amount to be shown? What is the actual amount shown? 10 lakhs. What was the required amount to be shown? 1 lakh. Difference? Misstatement. So it could be in amounts also. It could be in classification also. It could be in the disclosure also. Notes to accounts. Correct or not? Yeah. For example, there were two provisions on the company. They showed one. But they forgot to show one. Misstatement. Omission is also a misstatement. Because actual they showed only one. Required was supposed to be shown two. Disclosure they were supposed to show if there is a case on the company, they must also disclose the value. What is the penalty they might have to pay? They did not show it. Misstatement. They were supposed to say the penalty, but they did not. That is what is risk of material misstatement. They have given all those examples which I told now. No, same examples they have given here also. Will you mark these examples? Yes. They ask in the examination. What is the meaning of misstatement? Write down various examples. In this, just the audit risk you are supposed to mark. Rest entire thing you are supposed to do. R&D. Okay. Now, very important, risk of material misstatement. Now, this misstatement can be at two levels. One is at the financial statement level, one is at the assertion level. If you remember, as of now, assertion, you can keep it as like individual P&L item or individual balance sheet item taken up, anywhere like that. Or in that P&L item, if you remember, OCCCA, in that any one assertion, the misstatement, any one assertion. So there are two levels of misstatement. One is at the overall financial statement level, one is at the assertion. See my reaction, overall financial statement level and at assertion level. If it is an overall financial statement level, matlab the entire financial statements are majoritarily materially misstated. That means if you open up the balance sheet, asset side, if there are 7 assets, 5 assets there are misstatements. So can I say majoritarily the financial statements are misstated? So that is called as misstatement at the financial statement level. Practically, whenever there is a materiality, whenever there is a misstatement at financial statement level, we do not perform any audit procedures. Common sense, why? Entire financial statements are materially misstated. Simple example. The going concern assumption was lifted. Matlab, they are supposed to prepare the books of accounts on liquidation basis, but they still prepared it on going concern basis. Entire financial statements prepared are wrong. You tell me what audit procedures will you perform? There is no sense of performing. Directly give a report. Either give a report, adverse opinion, sir. Your entire financial statements are wrong. The company was supposed, second example, the company was supposed to prepare the entire financial statement as per Ind AS. You know Ind AS? CA finance you are going to learn. There are a few listed companies are supposed to follow Ind AS, but that company followed AS. Entire financial statements are materially misstatement. So can I say financial statements can be materially misstated at financial statement level? That means overall level. Understood? In that case, we do not perform any audit procedures. It is no sense. Then comes at assertion level. Assertion level, P&L item level, 1 or 2 items there go. In that item, only occurrence there will be some error. Somewhere accuracy there will be some error. Basically, it is not affecting the entire financial statements. Somewhere it is very small. In this case, you tell me, will you not perform audit procedures like financial statement level? You are going to perform. You are going to perform audit procedures. Why? You are going to determine the NTE. NTE, nature, timing, extent of your audit procedures to reduce those misstatements at an acceptable low level. Can you reduce the audit risk to 0? Can you reduce the audit risk to 0? You cannot reduce the audit risk to 0. You can reduce it to an acceptable low level. Similarly, here also, if there is a misstatement on assertion level, we try to identify those misstatements. We try to rectify those misstatements by determining the NTE of our audit procedures so that we bring down those misstatements at an acceptably low level. Will you mark this entire thing? Yes. Then, as I told you, audit risk is a function of 3 risks: inherent risk, Control risk, detection risk. I told you, risk of material misstatement is a function of two risks: inherent risk, control risk. That is written over here. Components of ROMM. Now, ROMM is a component. Now, that risk of material misstatement, no, it is because of two reasons. One is inherent risk, one is control risk. You will ask me, Atisha, why not misstatement is because of detection risk? I'll tell you why. If you have understood properly when you attended my class, inherent risk and control risk are risks which are caused by the management, and detection risk is a risk which is caused by the auditor. I would not say caused by the auditor, it is because of the auditor. Okay, those two risks, no, inherent risk and control risk, are influenced by the management. Detection risk is influenced by the auditor. I'll explain you in simple words. Inherent risk ka meaning, this is the definition, first paragraph, you're supposed to mug it. You're supposed to mug the first paragraph inherent risk because it is the definition. Rest entire thing, do it RMN, it is okay. Do RMN, it is okay. Okay. Same thing, control risk, mug the entire thing because the entire thing can be asked. And the first paragraph is the definition. Similarly, detection risk. Detection risk, you're supposed to mark the entire thing. But the first paragraph is the definition. Plus this two boxes also you're supposed to mark because it is the components of detection risk. If I say, okay, components of detection risk. Coming back to inherent risk, I'll make it very simple. Few items in balance sheet or P&L. Few items in balance sheet and P&L, even before considering any controls. What controls? Internal control system. Even before considering those controls, there is a good chance that those items like misstatements irko. Why? Because of the nature of that item. Take related parties. I told you, know, the easiest way and the highest way of doing fraud is to related party. Why? Because it is the nature of that item. Correct? These provision for doubtful debts, uncertainties, these suits, provision for losses, it is based on some subjectivity. Even before you consider some controls, internal control system, there's a good chance that there will be a misstatement. Why? Because of the nature of the item. Please put in bracket here inherent risk and write because of the nature of the item. Because of the nature of the item. Because of the nature of the item. So if you see, inherent risk is the susceptibility, possibility, probability of an assertion. Assertion matlab that O, C, 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 A. Basically, assertion about a COT. What is COT? Class of transaction, which is nothing but P&L item, account balance, or disclosure to a misstatement. Understand this much now. Inherent risk is the possibility that an assertion of a P&L will be related to a misstatement that could be material either individually or aggregated with the other misstatements before consideration of any related controls. I'm not kidding. If you don't write this particular line and if you write the rest and for this particular line you write something else, they'll give you 0 marks because this is the heart of inherent risk definition. They're telling before even considering controls, if you feel that there is a chance that in this item there is a misstatement, that means there is because of the inherent risk. That means item inbuilt that risk is there of misstatement. Why? Because of the nature of that item. You tell me inherent risk is same for all the items? No, yaar, come on, yaar. Inherent risk is different for each of the items. Correct or not? Somebody will be having high, somebody will be having mediocre, somebody will be having low. We'll have to categorize them. Who will have to categorize them? Auditor will categorize it. Which is having high, which is having low, which is having medium. Understood? Yeah. Come on, time, no, George. You'll miss the beginning. If you miss the beginning, you'll not understand. We started with chapter 3. Yeah. Then rest thing is RMN only. They have told that inherent risk is different for different items. Auditor will categorize those items into different categories. Understood? Yeah. Then they have given few examples also about it. No need to read it. Example, there is a small chance that they might ask, but okay. If you're able to read it, read it. Examples. Then coming to control risk. What is control risk? See the heading, no, controls. That means it's a risk related to controls. Actually, you tell me why is inherent? I told you, inherent risk and control risk is management's risk. Inherent risk item. Is there any influence done by the auditor over here? No, it is the management only because they are making the financial statements. Am I right? Same thing, control risk. Who prepares the controls? Who makes the controls? Management. They will use their own judgment for making those controls. No, whom to give what kind of responsibility, who will review whose work, how many CCTV cameras are to be here, correct or not? So again, control risk is influenced because of management. Understood? MCQ. Inherent risk, control risk are influenced by management. Detection risk is influenced by auditor. Understood? Control risk. What is it? It is very simple. The controls which have been designed, implemented, and maintained by the management is not able to or will not be able to prevent, detect, and correct misstatements on a timely basis. That means controls have been designed, implemented, maintained by the management, but they are not able to prevent or detect and correct on a timely basis. Take it. See, if there is a fraud, after 10-15 days, after a month, they will identify it. But after the fraud, 1 month, what is the use now? Controls are supposed to identify the fraud on a timely basis. Why? Because there is a control risk. Sometimes we use judgments while putting up those controls. Human errors, You're going to learn inherent limitations of internal controls. It is purely based on human judgments. Human errors can happen. Am I right? So that is control risk. Again, the same definition. Control risk is a risk that a misstatement could occur in an assertion about a COT, AB, or a disclosure. That could be material. Material can be either individually or in aggregate. You know the meaning of this? Sometimes the misstatement amount is so huge that individually it will be material, or sometimes if you add 2 or 3 misstatements together, it will become material. Understood? Kya? Then this is again the same thing. You can read it on your own. Key control risk is a risk that internal control existing in operating entity would not be efficient enough to stop the misstatements. Sometimes no, they have to make sure that what is our job as auditors? We check whether those internal controls which have been framed by the management, whether they are efficient and effective throughout the year. Throughout the year, they must be working effectively. Understood? Kya? Again, they are given some examples. This I would suggest, if you are able to mug it. Check it out. Because sometimes they ask, write down what is control risk and write down the examples of control risk. See the first example, no? Company has devised the control. What controls? That cash book and check book should be not cash book. Cash and check books should be kept in a locked safe and access is granted to authorized personnel only. There is risk that the control is not being followed. Here also take our institute. There is a drawer where we have to keep all the money in checkbooks. And authorized person, sir has been given the authorized person key. Only he can open the drawer. But if tomorrow, if as an auditor, see everybody is opening the drawer, tomorrow anybody can take that money and run away, no? Correct or not? Yeah. Control? No control. Understood? Kya? Next come detection risk. Very simple. Detection risk is influenced by auditor. Why? Auditor is supposed to perform audit procedures. Through that audit procedures, what is supposed to get? He's supposed to get audit evidence regarding any misstatements are there or not. What if his audit procedures are not able to detect those misstatements? It is called as a detection risk. There are two reasons because of detection risk. One is sampling risk, one is non-sampling risk. What is sampling risk? You know, auditor does 100% checking? No, he does it on a sampling basis. So 100 items are there. We checked 50. 50 we did not check. But in that 50 checking which we checked, we made an estimation of the other 50 also. Example I'm telling you, we're going to learn in chapter 4 SA 530. Out of those 100, I checked 50. 50 I got 4 misstatements. 50 I got 4 misstatements. Can I make a projection? In the other 50 also, there will be minimum 4 misstatements. But there is a chance there can be 40 misstatements also in the next 50. Correct or not? Yeah. Or there was 0 in this 50. There is a chance that there may be 2 or 3 misstatements which are huge. Sampling, ma. We cannot check everything. There is always a risk. Correct or not? How will you reduce this sampling risk? Check more and more items. Increase your sample size. Instead of checking 50, check 80. But again, practically we will see. If it is possible, we will do it. Understood? Because one of the reasons for detection risk is sampling risk. What is the other one? Non-sampling risk. What is non-sampling risk? Any risk of misstatement which is caused other than the sampling risk is called as non-sampling risk. Very simple. Where you were supposed to perform audit procedure number A. Take it now. ABC. Sorry. You were supposed to perform audit procedure ABC. You did not perform these. You perform XYZ. What audit procedure required? That you perform no. Correct or not? Yeah. Understood what I'm trying to do. Same thing. Non-sampling risk. It is the risk that the auditor reaches an erroneous. Erroneous means wrong conclusion for any reason which is not related to sampling risk. Like an auditor may reach an erroneous conclusion due to usage. Usage means application of some inappropriate audit procedure. Understood? Kya? In short, can I tell we have done the entire audit risk meaning and those 3 risks. Audit risk is a risk that the auditor might give an inappropriate opinion when the financial statements are materially misstated. Audit risk is because of 3 reasons: inherent risk, control risk, detection risk. Inherent control is because of management, detection is because of auditor. Inherent in simple because of the nature of the item. Even before considering any controls, there is a good chance that there is a misstatement in that item. Why? Because of the nature of the item, the related parties, provisions. Then coming control risk. Control risk, controls are not able to prevent, detect and correct on a timely basis. Detection risk, auditors audit procedures will not be able to detect the misstatements on a timely basis. Understood? Okay. What is next? Audit risk. What is not included under audit risk? Just now we understood audit risk. What is not included? Inherent control detection. What is not included under audit risk? If I tell you tomorrow I live with my family, taken. I have my own firm, taken. And my firm, there is some case going on. Somebody has filed, some other chartered accountant has filed some case on my company for some other reason. Because of that reason, I'm not able to give a proper opinion on some other company's FS. Is it a right reason? Having my own firm, I'm having my own firm, CA firm. Some other CA has put up a case on my firm. Why? Because of some other reason. Some I say legal action is taken. Because of this entire havoc, I gave an inappropriate opinion in my one company's auditor's report. Is it even relevant? Your own reputation, your company's reputation, Because of that, if you're giving some wrong opinion in some other company and you telling it is audit risk, it is not audit risk. Risk which is related to that audit is called as audit risk. So that is why they're telling auditors own business risk, what, such as loss from litigation. For example, there was a case on me, I lost, okay, or adverse publicity, that means publicly my name is going bad, or another event arising in connection with the audit of FS. So anything which is related to the audit, that is inherent control detection, that is covered under audit risk. Anything apart from this, it is not covered under audit risk. Understood kya? Any doubts kya? And what is the second one they're telling? Audit risk does not include the risk that the auditor might express an opinion that the financial statements are materially misstated when they're actually not. You think practically, logically, is there even a chance that the auditor has done an audit of a company? Actually, there were no misstatements. Really, there were no misstatements, but auditor found a misstatement. I'm telling you, in reality, there were no misstatements in the FS, but the auditor told, misstatements. Is it even possible? This kind of risk is very insignificant. It is very rare. Rarely it is wrong. When the entire financial statements are clean, how the hell you do get a misstatement? This also is not covered under audit risk. Understood kya? Then this is complete RMN. What they're telling, assessment of risk. Generally, when we start the audit, we have to assess the ROMM. We have to assess the ROMM. How do we assess the ROMM? I will tell you. We're going to learn one essay called as essay 315. We're going to do one essay 315, identifying and assessing the ROMM through understanding the entity, environment, internal control. Understood kya? So while we understand entity, environment, internal control, we are going to understand the basics. What is the entity doing, what is the sales happening, how is the sales happening, what are the controls over sales, what is the controls over purchases. With that understanding, we assess an ROMM. Assess means we come up with the percentage. Again, I'm telling you practically. Theoretically, we're not going to understand like that. You're going to get confused, but as of now, we keep it like this. We made an assessment that the ROMM in this company is mediocre, or it is very high, or is it very low. Who has to make this assessment? Auditor. He'll make an assessment because before, see, for example, even before you start audit, the toughest subject is audit. You made an assessment, no? Audit is one of the difficult subject when compared to others. Similarly, when you start doing audit, he'll make an assessment. He'll understand the controls, he'll understand the entity, he'll understand the business. And he'll be like, this company my ROMM is a little high. I'll have to perform a little detailed audit procedures. So they're telling this assessment which is made of the ROMM, it is clear-cut a matter of professional judgment. See the highlighted one which I've highlighted. It is clear-cut a matter of professional judgment. That means if I'm doing an audit of a company, I would have assessed that the ROMM is little high. You would have told it is mediocre. According to you, it is medium. According to me, it is purely based on our own judgment. How we understood the entity, environment, and internal. Same thing, RMN, entire thing. This entire chart is the same thing which I told you. Audit risk is nothing but ROMM and detection risk. ROMM is nothing but inherent risk and control risk. Detection risk, two reasons. Sampling risk and non-sampling risk. Combined assessment of ROMM. Write something over here, no? Combined assessment of ROMM. Write it. SAS, SA, standards on auditing. SAs do not consider SAs. तूने लिखा है वो? What you have written? Tell me now.
Practically audit procedures.
All right, okay. You can write this. Sorry, you can write this. Practically audit procedures. Cut whatever you have written. You have also written, yeah. Okay, write something what I'm telling now. Please cut whatever you have written. Tell me. Practically
audit procedures.
Practically audit procedures.
For inherent and control risk.
For inherent risk and control risk. Wait. Practically audit procedures for inherent risk and control risk are separate.
Are different.
Different.
Consider them.
Practically audit procedures for inherent risk and control risk are different. Practically audit procedures for inherent risk and control risk are different, but SAs consider them as one. Correct? But SAs, standards on auditing, SAs consider them as one. It's a mock question, it's a book back question which they ask. You want to write? Repeat it? Written? Okay. So basically what happens, practically when we start performing audit procedures, so we perform separately to identify how much is the inherent risk. We perform separately to identify how much is the control risk, practically. But if you see SAs for inherent risk and control risk, they have done a combined assessment. But it's not a rule. Even SAs have told, if you want to do combine, do combine. If you want to do separate, do separate. So that is what is written here. Standards on auditing do not ordinarily refer to inherent risk and control risk separately, but rather they make a combined assessment of ROMM. If you see, they are called audit risk is equal to ROMM into detection risk. That means for ROMM is nothing but inherent risk and control risk. They make a combined assessment. But practically, when we perform audit procedures, we perform separately on inherent risk, perform separately on control risk. Understood? Yeah, that's what, that is the thing of this particular thing. That coming to essay 315. This is the biggest essay of your entire audit syllabus. Biggest essay. Biggest matlab the biggest essay. Okay. What is this essay 315? Read the heading, no? Identifying, assessing ROMM. By doing what? By understanding the entity, environment, and one more thing will come. Internal control. Okay. It is not there, but aage jaake it will come. It is on internal control. Here it is. Including the entities, internal control. Okay. So basically the heading is this much. The heading is this much, but yeah, for essay 315 talks, key auditor, before even you start performing audit procedures, before even you start doing your audit, please understand the entity, environment, internal control. See, whenever we as articles, you'll go to do the audit, no? On the first day of your audit, they will give a briefing session. They'll tell you what the company is, what the company is selling, how much was the previous year's turnover. They'll give you the audited FS of the previous year, and they'll tell you, understand what the company is trying to do. See, before you learn something, you're supposed to understand it. Similarly here, you're now mugging audit, but before that you'll have to understand audit. Similarly, before you start doing the audit, you must understand what the company is, when the company was formed, what products they're selling, where they're selling, what are the different ways, online selling, offline selling, environment, internal environment and external environment. Internal environment, how many employees are there, whether the employees are good, who are the CEO, who are the MD, who are the directors. External environment, who are the competitors, who are the suppliers, who are the customers. You have to understand everything. Taken. And lastly, you have to understand the internal control also. So all this thing is covered under essay 315. Understood? Kya? So it says identifying and assessing the ROMM through understanding the entity, environment, and internal control. If you understand the EEI, entity, environment, internal control, you will get to know how much is the ROMM. Depends upon that. Taken. So yes, and ROMM is at two levels. What are those two levels? One is at the overall financial statement level. Second is at assertion level. So if you see this entire answer, taken, it's a mug one because they asked what is the write down the objective of essay 315. Write down the objective of essay 315. So you have to write the entire answer. You already know the answer. You know why? Let's see. They're telling first one, the auditor should identify the assess the ROMM at two levels. One is financial statement, second one is, you know this point. Okay, auditor has to identify and assess the ROMM at two levels. Okay. For identify and assess the ROMM, the auditor shall. Now, if he wants to identify and assess the ROMM, what he shall do? First one, identify the risk throughout the process of obtaining and understanding the entity, including the controls, by considering the COTAB and disclosures. That means if you want to assess the ROMM, you'll have to identify the risk throughout the process of obtaining understanding of the EEI. It is not that before starting the audit, you are just understanding and then no need to identify risk. No, throughout the audit, you are supposed to keep on updating your knowledge about the company. Understood? Kya? Identify the risk. Once you identify the risk, then you have to assess the risk. Assess the risk as the impact of those ROMM. Impact of that ROMM on your P&L and balance sheet. Okay, how big is that misstatement? How big is that misstatement? Second one, third one, relate the identified risk. Relate the identified risk to what can go wrong at the assertion, taking account of relevant controls that the auditor intends to test. Make sure ki what are those kinds of risks to what can go wrong at the assertion level. Like means if there are some misstatements which are affecting particular P&L, particular balance sheet, that also you consider. And last one, consider the likelihood probability. Okay, if there is a misstatement, what is the probability of that misstatement being affected in your P&L or balance sheet? Understood? Kya? Including the possibility of multiple misstatements and whether potential misstatement is of that magnitude, that strength that could result in a material misstatement. Making it very simple, there are two types which I want to explain. One is misstatement, one is material misstatement. Misstatement are normal, which the auditor might not consider. We are going to learn about materiality next concept. And one is called as material misstatement. Generally, material misstatements have a good magnitude, good strength. Strength as in it is going to affect the financial statements badly. Understood? Kya? Yes. Then RAP, again RAP is here. If you remember, RAP was done in chapter 2. That box was there. If you remember, RAP, risk assessment procedure. Risk assessment procedure are performed to obtain understanding of the EEI. Correct or not, yaar? Correct or not? Essay 315, identify and assessing the ROMM. By doing what? By performing RAP. RAP is what? Understanding the entity, environment, internal control. Why? Misstatements can be either due to fraud or error. It can be at assertion level or at overall financial statement level. Now, what is included under RAP? They have told, if you remember chapter 4 we read, one is called as PAPA level procedures. APPA level procedures means RAP, FAP, TOC, SP, TOD, SAP. These are called as APPA. APPA means our father. APPA level procedures. And if I tell you RAP, what will you perform under that? Then you'll have to tell me, Atishay, OICI, RRR. If I tell you, perform RAP for stocks, what do you understand RAP for stocks? I should have told you, no, okay, for stocks, you perform inquiry, you perform inspection, you perform observation, correct or not? So these are called as bacha level procedures, kids level procedures. So I would say RAP is like RAP, FAP, TOC, SP, SAP are like the heads. Below each of those procedures, we perform OIC RRR. Below RAP, we perform OIC RRR. Below TOC, we perform OIC RRR. Below TOD, we perform OIC RRR. Understood kya? Are you understanding what I'm trying to do? Similarly, if you want to perform RAP, if you want to, Satish, close the door. Huh? If you are performing RAP, risk assessment procedures, then what are the procedures which are included in RAP? If you see inquiries, we did inquiries in chapter 4, OICRR inquiries. Second one, if you see analytical procedures, substantive analytical procedures, SAP. We did observation there also. Yes, we did observation. We did inspection. Yes. So can I say out of that OICAIRRR, which were total how much? OICAIRR 7. Out of the 7, how many are covered over here? 4. Inquiries, analytical procedures, observation, inspection. So if they ask an MCQ, under RAP, what are those covered under RAP? They'll give you 3 from here, one they'll give you something else. Pick the odd one out. Pick the odd one out. Understood? So if you want to perform RAP, that means if you want to understand the entity, environment, internal control, what are the 4 things which are covered? Inquiry, analytical procedures, observation, inspection. Inquiry, it is very simple. Whom will you inquire? Management. Any person who's within the entity. Correct or not? So the first question over here is this entire box. This entire box, they are keep on asking from last 2 attempts. They asked in September 24 also. What did they ask? Auditor can perform risk assessment procedure by making various inquiries. Full stop. From whom the auditor can make inquiries? Explain. They can make inquiries towards the internal audit personnel. Please underline. They can make the inquiry towards internal audit personnel. What? Every company will have internal auditors. Internal auditors are way too different from stat auditors. Can we inquire from internal auditors? Yes, we can. Those employees who are involved in initiating, processing, or recording complex or unusual transaction, basically accountants who are passing entries. But what kind of entries? Complex and unusual entries. Then can he ask anybody who's in-house legal counsel? Or in-house legal counsel means in-house lawyers. These big companies know they will have lawyers within their company only. Reliance, they have one team of 10 lawyers inside the company, right? Now and then there will be some case running on the company. So it's huge. Can you discuss with them? Yes. Then can you ask anybody who's towards marketing and sales personnel? Sales manager, marketing manager, sales employee marketing? Yes. Can you ask anybody who's into the risk management function? Risk management, see, function means department. Department, it's a department, risk management department. What is the risk management department's job? To identify what are the various business risks which are there on the company. So can you ask them also? Because business risk will ultimately lead to risk of material misstatement. Remember this line. Business risk will lead to risk of material misstatement. How Atisha business risk? Just imagine tomorrow there is one. I'm running a company, monopoly company. Take care. Tomorrow one new competitor arises and he's doing good than me. He's performing well than me. Don't you think I'll be under pressure? My company will be under pressure. What will I do? I'll try to do now some kind of fraud in my financial statements. I will inflate my sales. I'll be into losses because competitors come. What will I do? I'll inflate my sales, duplicate sales, fake sales. Correct or not? That was a business risk. Why? Competitor has come. Because of that, there is a risk of material misstatement. So that risk management function, no, it is their duty. Okay, what are the businesses? They're going to identify them. So can you inquire them also? Yes, you can. And last one, can you inquire to those people who are into information system? That means those IT people. IT department or IT department people. We are also having IT department. There. So just underline these people. Internal personnel, employees initiating, processing, recording complex transaction, in-house legal counsel, marketing or sales personnel, risk management function, information system person. Auditor can inquire to anybody who is well within the entity. If you remember, rights given to an auditor, he can discuss with anybody who is within the entity. Correct? Now external, we learned that also, but you have to take a permission. Yeah, correct. So first one is this analytical procedures. Don't worry, but it is a mock question. This entire analytical procedures, they'll ask you. How will they ask this particular question? Auditor has to perform analytical procedures as a part of risk assessment procedures. Auditor has to perform analytical procedures as a part of risk assessment procedures. Then write this answer and come. What is analytical procedures? Already explained yesterday. Analytical procedures making some kind of analysis by either forming relationships or by doing comparisons. These are the 2 words main important, by either forming relationships or forming comparisons. Taken of various financial data and financial data and non-financial data. Understood? I give example of comparison. Compare your data previous data, compare your current data with the budget forecast, compare your data with any other company's data, compare your data with the industry average data. If you do this kind of thing, it is called as analytical procedures. What is the other part? Relationship. Relationship, I told you, between financial and between financial and non-financial. I gave you various examples also. Number of employees, salary speed. Number of employees is non-financial, salary speed is financial. Rent square feet, non-financial, rent paid is financial. You can make a relationship out of it, no? Correct or not? So all those kinds of things, if you perform here as a risk assessment procedure, will be covered over here. There is a full-fledged essay on analytical procedures which we're going to do today. Essay 520. Understood kya? Pakka kya? Then comes observation and inspection. With the heading, it is very simple. Observation means to observe something. Best example, physical inventory counting. The management personnel will do it. We are just going to observe whether they are following those instructions or not. Inspection, anything which is related to documents. Documents. If I give you title deeds of a land or property or a plant and machinery, what you're doing? You're going to inspect it. Same thing over here. So they're telling observation inspection can be done of the following things. They have given examples. You can observe the entity's operations. Can you observe the entity's operations? Yes. Can you inspect the documents? Yes. Can you inspect the records? Can you inspect the records? Yes. Can you inspect the reports prepared by the management? Management will make management report. This is called MIS reports, Management Information System. Some reports which are made by management every quarterly 6 months. Can you refer those? Yes, you can. The entities premises, yes, and the plant facilities, factory, plant and machine, that also you can observe. Understood? This is a separate question. Observation inspection, separate question. Analytical procedures, separate question. Inquiries, separate question. Mug. Understood? Then 1.8 is bogus. You can skip it, not required. We are done with audit risk. We are done with audit risk. Online, I hope you guys are there. Taken. Then coming materiality, which is very important topic again. Taken up. Auditors don't skip it from chapter 3. Always do audit risk from chapter 3. Then comes materiality. Again, very simple 10-12 page topic. Easy and important also. Easy and important also. What is materiality? Very simple. Which essay it is being covered? Essay 320. Now your question will be, Atish, just now you told essay 315 is the biggest essay. Covered, got cleared in 2-3 pages. Relax. After essay 320, again essay 315 will come. Taken, it will run for like 15, 20, 30 pages. Understood? Kya? So materiality. What is materiality? I told you. Whenever we start doing an audit, whenever we perform an audit, we have to set up a materiality level. What do we have to set? We have to set up a materiality level. What is that materiality level? See, depends on the size of the company, depends on the nature of the company, complexity, everything. We decide one amount. What is that amount? If I tell you, when I did audit of a company whose company size was around 100 crores, I set up a materiality level. Materiality level, if a misstatement crosses this level, only then I'll consider it to be material one. Below that, if there is a misstatement, I would consider it to be a immaterial one. Understood? That level which you have set to, that is called as materiality level. When I do an audit of a company which is 100 crores, I would set a materiality level of around some 1 lakh. Up to 1 lakh, if there is a misstatement, okay, I can ignore it. It is immaterial. But if the misstatement crosses 1 lakh, it is a material misstatement. I will have to check properly. I have to try to, eliminate it. See, misstatement, now you're supposed to eliminate it. My point is, if it is affecting your report, because if it is a material one, it might affect your report. It might affect your other audit procedures also. Understood? And misstatements can be either material, either individually or aggregate. Understood? So yes, materiality level has to be set by the auditor. After understanding the entity environment internal control, he will set that one amount. Over and above that amount, if the misstatement goes, it is called as a material misstatement. If it is below that, it is not considered to be completely immaterial, but we have to check in aggregately if it is crossing the misstatement materiality level. Understood? And not always, materiality is not always a relative, it is not a matter of size always. Sometimes it is a matter of quality also. Quality as in, just imagine if you're in a company, you're doing an audit, cash balance, there is a mismatch of 500 rupees, 1000 rupees, and nobody has any answer. And then you got to know it was a fraud done by an employee. 100 rupees, every month he's taking outside and going. Today it is 100 rupees only. Don't you think there's a big question mark on the internal control? Why? The internal controls is not working properly. That is why that employee can easily is able to take 100 rupees or 200 rupees every day. Today he can take 100. Tomorrow he might take 1 lakh also. Correct or not? That is our job, no? If there is any control which is not effective, efficient, we are supposed to report it to the management. Management, but this control is not effective. That employee, see 100 rupees every day, it is missing. So it is not always a matter of size. Only if it is big, it is called as material. Sometimes it is a matter of quality also. Even if there is a fraud like stealing, we will consider it to be a material, a flaw in the internal controls. Just don't see 100 rupees only being stolen, our material level is 1 lakh, 100 rupees. No, not necessary. Correct or not? So materiality is not always a concept of size. Sometimes it is a matter of quality also. See this, no? Material is not always a matter of size. For example, a small amount lost by fraudulent practices of certain employees can indicate a serious flaw in the internal control system, and immediate attention has to be brought over there. Understood kya? Understood kya? Will you mark this first paragraph? Yes. Will you mark the last two paragraphs? Yes. Last two here. Then comes materiality in planning and performing the auditor's responsibility. What you're supposed to mark? You're supposed to mark this thing. Only this thing. This thing you're supposed to mark. I guess मेरे class में वही mark किया. Correct? Yes. What is these three things? Think. I'll explain you one by one. Misstatements, including omissions, are considered to be material if they individually or in aggregate could reasonably be expected to influence the economic decisions of the users taken on the basis of FS. Now you'll be asking me question. What is the meaning of this point? And what do you properly explain what is this, influence the economic decisions of the users and all. See, Baba, you're doing an audit. You set up a materiality level of 1 lakh. How did you come up with 1 lakh? It was your own judgment, definitely. But you also considered what is that amount over and above which if it goes, the users, their decision might change. Because ultimately you're doing an audit for the users. Taken up. From the user's perspective, you must set up the materiality level. 100 crores company. 100 crores company. Take into consideration who are the users of the company and then set up a materiality level. But it is not like what users tell that only materiality level you have to set. No. Who is going to set? It is the auditor. But you consider what users are also thinking. Accordingly, you set up the materiality level. If you think if you are keeping 1 lakh, which is very high for the users, don't keep it. Bring it to 50,000. Understood? So take into consideration how the decision of the users are going to get influenced. Second point, judgments about materiality are made in the light of surrounding circumstances and are affected by size, nature, combination of both. So this materiality level is based on the size and nature of the entity, size and nature of the misstatement. After taking into consideration that, then you set up a materiality level. And third point, making it very simple explanation. Taken. Just now I told you have to set up a materiality level by taking consideration the users. For example, there are multiple users. There are thousands of shareholders. For some shareholder and bankers, governments, all these are stakeholders, yes. For few users, the materiality level will be like, Satish, only 25,000. For few users, it will be like 50,000. For government, it will be like 1 lakh. You tell me, are you going to set up different materiality levels and do the audit different types for each of them? Or are you going to consider them all as a group and you will set up an average materiality level for yourself and you're going to do it? Which one are you going to do? You will consider them as a group and set up one materiality level. You are not going to consider them individually. What is your materiality level? 25,000. Okay, I'll do the entire audit in 25,000. 50,000. I'll do the entire audit in 50,000. Not possible. Same thing. Judgments about matters that are material to the users are based on a consideration of a dash financial information common. That means we are going to consider all the needs of the users as a group. We'll consider you as a group. The possible effect of misstatements on specific individual users is not considered. Specific individual users, I cannot take up your own materiality level, do the entire audit and come back. Understood kya? Pakka kya? Will you read these 3 points? Yes. Then this entire page you can do RMN. Not that great. Not that great. And these 2 points are supposed to MCQ kind of thing. These two, what do I say? Materiality levels are given by AFRF. AFRF, your applicable financial reporting framework. See what happens now. One materiality which we have set is for the audit. For the audit, who sets that? Auditor. What these 2 points are, these two are materiality levels given by the AFRF, accounting standards. You tell me, is it optional or mandatory to be followed? Mandatory to be followed. That means what are those? As per division 1 of your schedule 3 of your Companies Act, any item of income or expenditure which exceeds 1% of the revenue or 1 lakh, whichever is higher, needs to be disclosed separately. Can I tell? Even this is like a materiality level set. If that income or if that expense ka item crosses this particular level, show it separately in the financial statements. Now my question is, what if this materiality level which the AFRF has given and your materiality level is different? Can the auditor tell, it is not crossing my materiality level, so I'll not disclose it? This is AFRF. Whatever materiality they have set, you are supposed to make sure that the management has disclosed it. You follow your materiality level, not a problem. Your materiality level is for the purpose of audit. This materiality level is for the purpose of financial statements. Understood? Same like the second one also. A company should disclose in the notes to accounts what shares in the company held by each shareholder holding more than 5. It is not more than equal to, it is more than 5% of shares, specifying the number of shares, etc. For example, total outstanding shares, how much are there? Check individually who is holding how much. If any one person is holding more than 5% of the total shares, his name, his address, how much shares, how much is the value, has to be disclosed separately in the notes to accounts. For example, auditor has set up a materiality level of more than 10 percentage. Can you ignore this? This is after of Companies Act. I've told. Okay, 5% more you have to show it. If you have 10%, you follow that also, not a problem. But 5% not 5% you have to follow it. Understood? Kya? Again, this is very simple. Determination of materiality a matter of professional judgment. Who determines the materiality? Auditor. Is it management? Management will come and sit with the auditor. Hey, man, auditor, you keep the material as 20,000. Array, it is my judgment. I'll decide. Take it. But what is the question actually talking about? The question is talking about ki while we are doing the audit, while we are setting up the materiality, while we are doing the audit, while we are setting up the materiality, the auditor has got some rights. The auditor has got some rights that he can assume a few things about the users. The auditor has got some rights that he can assume few things about the users. He can assume it irrespective of whether you are having that knowledge or you are not having that knowledge. I am assuming that you are having that knowledge. Understood what I'm trying to tell? The auditor can assume it. Okay, users. I'm assuming that these 4 points you already know about it. Whether irrespective of whether you know it or you don't know it, these 4 points I'm going to assume that you know it because you are a user of this particular FS. One common point. One of the point is telling okay, we do the audit as per materiality. We don't check everything. We set up a materiality and we do it. So users, I don't know whether you are aware of it or not, but I am assuming that you are aware that we do the audit only by setting up a materiality level. So this is one of the points. See, where did it go? Here it is. Understand that the FS are prepared, presented, and audited to the levels of materiality. Having a reasonable knowledge of business and economic activities. See, users, if you're a user of this FS, you'll be having good understanding, good knowledge about what the company is all about, what are the business operations, what is how the company is formed, etc. Only then you are a user, no? Chumma, you will not be a user. Then, recognize the uncertainties inherent in the measurement of amounts based on estimate, judgment, consideration of future events. I'm assuming it that you are aware of the fact that few items in the P&L and balance sheet are purely based on judgments, purely based on uncertainties. Everything is not fixed. Take care. And last one, you as users are going to make a reasonable economic decision based on the information of the FS. Take reasonable decisions. I'm assuming it. You are not looking at financial statements, very nice, invest all my money over here. No. You must take reasonable economic decisions. Understood? Kya? Then comes performance materiality. Put it as mug, entire thing. They ask a short note. Performance materiality. What is performance materiality? As I already told you, misstatements can be material either individually or aggregate. Sometimes if it is individually crossing the materiality level, that whatever we discussed now was materiality set for the financial statement as a whole. Financial statement as a whole. That if the entire financial statements there, whatever misstatements you have got, if it is crossing more than 1 lakh, it is considered to be material misstatement. But now we are going to talk something called as performance materiality. That means we are going to set one more materiality level, which is below the materiality for the financial statement as a whole. For example, you set up the materiality level for the financial statement as a whole as 1 lakh. Now you're going to set one more materiality level, but it will be below the financial statement materiality. For example, 50,000. Why did you set this 50,000? What is the reason behind it? Because you wanted to reduce the probability. You wanted to reduce the probability that those aggregate of those misstatements, no, small misstatements, it must not cross 1 lakh. It must not cross 1 lakh. Same thing for examination also. You are preparing to get at least 80 marks, but you are making sure that you are also preparing for at least 50 marks. Same thing here also. Same thing here also. You are setting up a materiality for 1 lakh. That is for the financial statement as a whole, but you are also setting up one more materiality which is below the financial statement as a whole, which is of 50,000. Why? The moment it crosses 50,000, no, those small misstatements, you will be active. It has crossed that 50,000. It might now cross 1 lakh. So that you set up that level so that 50,000 ka misstatement which has crossed, no, it will not cross the 1 lakh one amount. Understood? Kya? So always we set 2 levels. One is materiality for the financial statement as a whole. One is materiality for the financial statement below the financial statement level, which is called as performance materiality. Understood? Kya? Understood? Kya? This thing is particularly RMN. You can do it RMN. 2.6. It is a mug 1 question. What is this particular mug question? Whenever you set these materiality, use some benchmarks. Whenever you set materiality, you use some benchmark. Benchmark, you understand, like a standard. It's a benchmark. Similarly here also, they're telling factors that may affect the identification of the appropriate benchmark. Now, you told me, no, ki materiality, Atishay, you are setting up 1 lakh. Why did you come only at 1 lakh? Why not 1.5? Why not 2? Why not 3? You will ask me a question. No, I'll tell you. See, I have few factors which I considered. I considered few factors, and then I'm going to select those benchmarks. For example, what are those different factors? First one, the elements of the FS, like assets, liabilities, equity, revenue, expenses. I'll check these elements. Out of these elements, I can select any one of the benchmark. Can I take assets as a benchmark? I can take. For example, I take the entire asset side. Entire asset side is 7 crore. Acha, 7 crore assets. Kya? Okay, I will keep the material as 2 lakhs. Why? Because the assets is 7 crore. If the assets is 70 crore, I would have increased my material level to 20 lakhs. Understood? So on the basis of benchmark, what you're selecting, you're going to decide your material level. So one of the example, these are the examples of benchmark. So one of the example is asset. Another example is liability. Another example is equity. Another example is revenue. Revenue of the turnover or expenses. On any basis of this, you can select a benchmark. Then whether there are any items on which the attention of the users is focused. For example, if you are checking the evaluating the financial performance, users may tend to focus more on profit, revenue or debt assets. See whether the company or the users are more focused on a particular item. For example, generally the users are always focused on profit only. So use profit as a benchmark. Take net profit. According to net profit, set up your material level. So what is the benchmark? Net profit. Or sometimes you can take revenue or you can take net assets. What is the third one? The nature of the entity or how it is structured. Structured matlab an entity can be financed either in equity or it can be on debt. So they have given the same example. If an entity is financed solely by debt rather than equity, then users will put more emphasis on the assets. If there is too much of liabilities on the company, as a user, you will focus more on liabilities or on the asset part. You'll focus more on the asset part. Why? Because tomorrow if something happens to the company, do you have that much of assets to sell and discharge your liabilities? So as users sort of focus will be more on the assets. Take assets as a benchmark, no? Understood kya? And last one, the relative volatility of the benchmark. Volatility, see whatever benchmark you take, make it sure that it is stable. It must not be volatile, because if it is volatile, then your benchmark, the maturity which you're going to set, no, it is not appropriate. For example, take a sari making business. In Diwali season, Pongal season, their sales will be super high, but rest of the season sales will be very low. You think and tell me, is the sales stable in the entire year? It is very upper niche. Can you take sales as a benchmark then? No. Why? You will not get the appropriate material level. Correct or not? So use some that kind of benchmark whose volatility is not that much volatile but stable. Understood kya? Then you have decided what are the factors while selecting a benchmark. What are the factors? Now we're going to decide from where we can take that benchmark. Just now we decided what are the factors of the benchmark. When we can take asset, when we can take liability, when we can take profit, etc. But now we're going to discuss from where you can select that benchmark. See, you decided no, chosen benchmark. You have chosen one benchmark like assets. You have told Atishay, I'm going to take assets, or I'm going to take profit, or I'm going to take revenue as a benchmark. Now your next question, Atishay, from where can I select this particular benchmark? I'll give you 4 options. Any of these 4 options, you select the asset. First one, prior period financial results. Take the last year's financial results. See whether it is almost similar. Take last year's total assets and use that as a benchmark. Second one, period to date financial results. Period to date means how much of the financial statements of this year is prepared. For April to December, if the financial statements are prepared, from that period you select one particular benchmark. Assets basically. Budgets or forecast. Budgets irukku. Company would have made forecast for the current period. Use that forecast. In that assets will be that. Take that asset as a benchmark. Understood? And last one, adjusted for significant changes in the circumstances of the entity. Very simple. Last year's FS is there. You will do plus or minus for significant changes and you'll get the current years. Do those plus or minus changes, whatever financial statement you get, from that you take assets. This particular question talks about from where we can select the benchmark. You can select it from the prior period FS. You can select it from the period to date FS. You can select it from the budget forecast. You can select it from the prior period FS, but make some plus or minus changes. Understood? Understand the difference properly. These are the factors which you consider while selecting a benchmark. And this is from where you can select the benchmark. Both are mock question. Understood? This 2.6.2 RMN. What is this? Very simple. Again, continuing the story. You determined assets to be the benchmark. 7 crores was the asset. And you decided 1 lakh to be the materiality. And I'll twist the amounts to make it simpler. 10 crores was the total assets. 10 crores was the total assets which you chose as a benchmark. Correct or not? And you decided the materiality level as 1 lakh. How did you come to 1 lakh? What did you do? You took 10 crores as assets. Assets were 10 crores. By seeing 10 crores, you set up a material of 1 lakh. How did you reach to 1 lakh from 10 crores? What did you do? You did some multiplier of some percentage. Now that percentage which you multiplied, who will decide that percentage? Auditor. Will management come and tell you? Auditor, 10 crores is my assets. You do one thing, multiply 5%. Keep it as 5 lakhs. Array, auditor, this is my job. I'll decide what is the benchmark I want to use. I'll decide what is the maturity level. So generally we multiply a percentage to that benchmark and we get the maturity level. Understood? Kya? This is the same thing. So RMM, pure cut RMM. Just read that in. Determining a percentage to be applied as a chosen benchmark involves the exercise of professional judgment. This particular thing, again, it is simple only. You can mug it. It is very simple. 2.8 mug slash CBQ. Mug slash CBQ. Why 2.8 mug slash CBQ? You think and tell me. When you started doing the audit, when you understand the entity, environment, internal control, you would have set up a maturity level. Only once you set up a maturity level, then you start the audit, no? Can there be a chance that after doing the audit for like 15-20 days, can you revise your maturity level? Is it like a rule? Okay, once the maturity level is fixed in the beginning, you cannot change it. Is it a rule anywhere? Logically think and tell me. You have set up a maturity of 1 lakh. Then further you thought ki it is too high. Why it is too high? Because you are finding more misstatements of 60,000. Then what will you do? You will bring down your maturity level from 1 lakh to 50,000. Correct or no? Because you are finding multiple misstatements which are crossing 50,000. So you will be like, I don't want to take a risk because many misstatements are crossing 50,000. So can you revise your maturity level? Yes, you can. Can you increase it? Yes, you can. Can you decrease it? Yes, you can. But keep one point in mind. Whenever you are changing your materiality level, one thing also has to be changed. What? Performance materiality. The level which we kept below the materiality of the financial statement levels below, same. So when you reduce it from 1 lakh to 50, probably your performance material would have been 50. You would have to bring it down to 25. Understood? Kya? Pakka kya? Can you increase your material level? Yes. For example, you set up as 1 lakh. You did not find any misstatement. What will you do? You will make it to 2 lakhs. Pakka kya? Can you revise the material level? Yes. Is it allowed? Yes. Documenting the maturity. Whatever you have learned till now, that you have to document. What you have learned? Normal maturity level? Yes. Performance maturity? Yes. Can you set up maturity level for each class of transaction, balance sheet and P&L? Yes. For example, while we are doing the vouching verification of sales you were checking. Can you set up a maturity level for sales in particular? Yes, you can. For example, over and above 10,000 invoices only I'm going to check. That is called as maturity level, no? Sales invoices which are crossing over and above 10,000, only those I'm going to check. Only those which crosses 5,000 misstatements, I'm going to check those. Again, you have set up a maturity level for the sales. Understood? So what are the 4 things which you're going to document? One is the maturity level for the financial statement as a whole. One is that performance maturity. One is that maturity for the individual, each period, COT, ABDs. And last one is any revision made in above things. Same thing written here also. Maturity for the financial statement as a whole. Maturity level for individual COT, ABD, performance maturity and revision in any of those above. Understood? Kya? Then coming to maturity and audit risk, directly come over. This entire thing, no? This entire thing. If you read it, I'm not kidding. Everything is covered. Chapter 1 layer, they have put the audit risk definition. Chapter 1, they have told that objectives of audit. They have written same thing over here. Just come to here. Materiality and audit risk are considered throughout the audit. See, whenever you're doing the audit, throughout the audit, that means till the auditor's report is made, till that day you're going to take into consideration materiality and audit risk. So in particularly, now they're telling in particularly, that means in these 3 situations, please always keep that materiality and audit risk concept in your mind. First one, whenever you're identifying assessing the ROM, whenever you're identifying any ROM, assessing the ROM, please keep the maturity level concept in your mind and audit risk. Okay, because of this ROM, what can be the audit risk? Correct or not? Then determine the NT of your FAP. Whenever you're determining the NT, nature, timing, and extent of your audit procedures, what kind of audit procedures? Further audit procedures, please keep into mind what materiality and audit risk. And last one, effect of these uncorrected misstatements. Uncorrected misstatements, common sense. Auditor performing audit procedures to identify misstatements. Whatever misstatements we get, are we going to rectify it? No, we are going to give it those to the management. Management will rectify it. For example, we gave 10 misstatements, management corrected only 5. Those are called as corrected misstatements. What are the other 5? Uncorrected misstatements. So when we are going to learn, there is an essay taken, essay 450. Yes, uncorrected misstatements. It is very huge. Sorry, it is very small and it is very simple. Whenever there are any misstatements which are not corrected by the management, even those uncorrected misstatements would impact, we have to check, because those misstatements are not corrected in the FS. That means those misstatements are still there in the FS. So in that also, please keep into mind what materiality and audit risk. Understood? Kya? With this, we are done with the first 2 big topics. I told you, I divide the chapter into parts. First 2 parts are done. First part was audit risk. Second part was materiality. Both are very simple, easy scoring also. Never skip these topics. Understood? Then comes again your favorite essay. Essay 315. What is essay 315? Identifying, assessing ROMM. ठीक है ना, whether at financial statement level, assertion level, whether due to fraud or error. Again, now we told, okay, we have to understand the entire entity, we have to understand the entire environment. What are the things which we have to consider while understanding the entity and while understanding the environment? It is very simple. I'm not going to explain in detail. Just see the heading. What is the first heading? Relevant industry. If you're doing an audit of a Honda, which industry it relates to? Automobile. So you have to have good knowledge about the automobile industry. Correct or not? Second one, regulatory. Who regulates? Now, if you're doing an audit of a bank, Companies Act is there, RBI Act is there, Banking Regulation Act is there. So you must have full knowledge of those regulatory acts also. Other external factors, anything which is outside the company. Who are the company's suppliers? Who are the company's customers? Correct or not? Who are their competitors? Because even they create a problem while they're doing the business. Correct or not? And including AFRAF. AFRAF for Companies Act is your accounting standards. For banking, it is given by Banking Regulation Act. So these are the factors which you have to keep in your mind while you're understanding the entity and its environment. So they have given all those points with examples. Same what I told, no? They are given with examples. Then comes the nature of the entity. So if you see the point, first we are talking about the industry. See here, my hands. First we are talking about the industry. Now we're going to come inside. Inside the entity. That entity which you're doing already, Honda. Now in that entity, what you're going to understand, four things. First, their operations. Okay, what they are doing actually, what kind of business they are into. Second one, the ownership, who are the owners, and the governance structure, how the company is being governed. Types of investments, okay, what are the different investments the company is making, planning to make, and investment in special purpose entities. And last one, the way that entity is structured, how much is the debt, how much is the equity, how it is financed, whether the auditor is able to understand the COT, ABD. These 4 points, if I tell, they are specifically to the entity which you're doing the audit. Understood? Kya? Then you're supposed to mug these examples. What are these? These are those examples for each of these points. Like on operations, they have told business operations such as nature of revenue, from where they are earning revenue. Honda, if you see, they are earning revenue by goods also, that means selling cars, bikes, and they're earning something through service centers also. So that is that example. Second one, that investment wala point was that what is their investment, how much is their investment activities, how much is the capital investment. Third one was about financing activities such as major subsidiaries, and financial reporting such as accounting principles and revenue recognition practices. So these 4 points ka 4 examples they have given over here. Understood kya? Then first we discuss about industry, then we jumped on to entity. Now inside that entity, they would have been following some accounting policies, SLM, WDV, FIFO, LIFO, VAM. That also you are supposed to understand and check whether they are appropriate for the company or not. Then comes in even more inside the company. What is that? Checking their objectives and strategies and those related to business risks. I already told you, whenever the company is doing any business, there are going to be multiple business risks. And I told you, business risk will lead to risk of material misstatement. So whatever business risks are there, please you also consider them, auditor, and please check whether the management has got a risk assessment function within their company. I told you know that risk management function, separate department, their job is to just identify the risk, check the impact of that risk, how they are going to give a response to that risk. You are supposed to check whether the department is working properly or not, whether the strategies what the company are making, whether they are feasible or not. Correct or not? Yeah. Then for example, they have given what are those different examples of the objective strategies. Industry developments. If the industry is developing, for example, I'll give the best example, Nokia. When Android came, Nokia did not change to Android. They were still using that Nokia Lumia Windows. Industry developed technologically wise, but Nokia did not develop. It was a big question mark. What? On their business risk of material misstatement. See, the company is gone now. Correct or not? Same thing. New products, new services have been come. New products are coming, new services are coming, but your company is not able to cope up with their products and service. It will create a business risk. Ultimately, it will lead to risk of material misstatement. Expansion of a business. They are expanding like mad. They're expanding it, but they don't have any resources. Correct or not? Sometimes they will go down. Am I right? Kya? Then the last most important point, which is the measurement and review of dash 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 entities financial performance. This is the most important thing if you want to understand the entity and the environment, to check whether a company is financially strong or weak. Now this box is important. How you are going to check whether the company is financially strong or weak? What are those examples? What are those points? You're going to check various performance indicators, various key ratios. FM you would have learned so many key ratios, no? net profit ratio, GP ratio, this ratio. What do you understand by that? How much company is strong? Am I right? So those ratios. Then comes period on period financial performance analysis. Take last 3 years ka FS, take this year ka FS. Do a analysis whether the company is growing or whether the company is going down. Correct or not? With this, you'll understand how much the company's financial performance is. Then budgets forecast, variance analysis. What is this? For every year, company makes budgets, company makes forecast. Check whether the company is able to touch the budget or forecast or not. If they are not able to touch in any year, that means the company is not doing great. And last one, credit rating agency reports. There are big companies. I forgot the company name, Crystal or Crystal. That company, huh? Sibyl, exactly. There are companies who gives this credit ratings to companies. A plus, A plus plus. Taken up. They give ratings. Check those reports also. Like how we have got Sibyl, no? They have got Sibyl of their own company also. Understood? Kya? 3.1 bogus. It is not important. 3.2 you can read it or not. Why? They have told understand the entity is not a distinct process. It is a. So that means throughout the audit, you are supposed to understand the entity. You are supposed to get more and more knowledge about the company. It is not like while before starting the audit, you're going to understand and then just do the audit. Throughout the audit, you're supposed to understand the entity. It's a mug question. Huh? It's a mug question. Then comes heart of this chapter, SA 315. SA 315. But what SA 315? We are going to talk about purely the internal controls. If you remember, SA 315 was understanding the entity, environment, internal control. Just now what we did know that ABCD, it was understanding the entity and environment. We forgot what was the heading for this ABCD which we did now. Understanding the entity and environment. This ABCD we did now, no? Now we're going to jump upon understanding the internal controls. Understood the breakup of the chapter? Yes. So what is this internal controls? If you know what is internal controls, you know what is internal controls? It is nothing but policies, procedures, various responsibilities, roles, segregation of duties which the company has framed so that the misstatements are reduced. They design, implement and maintain internal controls for this purpose, you know, so that the misstatements do not occur in the company. Yes. So if you see, there are 4 objectives. How many objectives? 4 objectives. Why this internal control has been set up? 4 objectives. Here it is. See, entities objectives with regards to reliability of FR. You tell me, if the internal controls are strong, the financial statements which they prepare will be more reliable. Am I right? Correct or not? If there are too many internal control systems, too many passwords, too many roles and responsibilities given to too many different people, can I tell when internal controls are strong, financial statements reliability will also increase. Correct. Second one, effectiveness and efficiency of operations. The company's operations will be more smooth. It will be more effective and efficient. Safeguarding of assets. I told you, no, they must have proper lockers. For example, that door key, they have a lock. Why? Because there are inventories in there. So please have proper safeguarding of assets. And last one, compliance with applicable laws and regulations. There are multiple laws and regulations applied to company. They have given separate roles and responsibilities to various employees in the company. You are supposed to check this, you are supposed to check this. These are also called as internal controls. Understood? There are 4 objectives. These are those 4 objectives. Again, 4.2 is the same thing, only those 4 objectives have been printed here, so it is a skip one. 4.2. What is the benefit for an auditor if you understand the internal controls? How will the auditor get benefited if you understand? Simple. It will help you to identify the types of potential misstatements. If you understand, here the internal controls is weak in stock warehouse, the internal control is little weak. That means there is a chance of potential misstatement over here. Identifying the factors that will affect the RMM. What are the various factors which will create a RMM? And last one, it will help you to design the NTE of your further audit procedures. Understood? Then comes one of the most important topic, which is the limitation of internal control. Like how we understood inherent limitations of audit. Now I'm going to discuss about inherent limitations of internal control. Just read the heading, you'll understand. First one, internal control can provide only. Nothing in this world can provide absolute assurance. Why internal controls can provide only reasonable assurance? Because there are various reasons. It is purely based on judgments. Whose judgments? Management judgments. They will only decide, no, where, how much internal controls has to be put. Can there be human errors? Humans, here, can we go through some errors? See, human judgment is involved in making decisions. Where, how much internal controls has to be put. Lack of understanding the purpose. I have given you a rule. Kaushal, whenever you are taking out from the drawer any cash for any expenditure, you must tear a receipt, cash receipt, and sign it, put the date, and write the purpose. Why did you take out that money? You are not following it. You are not understanding your purpose. You know why? If you tomorrow don't tear that cash receipt and keep, if there is a mismatch between the cash, how will the auditor identify? Forget auditor. How will the management identify how much cash is missing, how it is missing? Only if you tear those cash receipts and keep, You'll get a track, no? Yeah, this date this much money was given to this guy. Correct or not? So lack of understanding the purpose. Sometimes, yeah, employees will not understand their own purpose. It is an inherent limitation. Collusion among people. The employees will collude with them among themselves and they'll do the fraud. Employees of my company will collude with the employees of my vendor company. They will collude and they'll do the fraud. Inherent limitation. You cannot stop everything. Judgments made by the management. It is as similar to this point. Human judgment, judgment made by the management. In designing the internal controls, whose judgment is involved? Management's judgment. It might be faulty sometimes. And last one, limitation in case of small entities. What is this? See, if it is a huge company, very big company, there are multiple people. Roles and responsibilities will be given to everybody. That means segregation of duties will be effective. Everybody will be given one kind of duty. Think and tell me, if one person is given all the duties, all the roles, all the responsibilities, all the powers, don't you think he'll go mad? He'll go mad. If you give all the responsibility, tomorrow it will be very easy for him to do the fraud. Correct or not? For example, accountant over here, he's passing the entries and he's only maintaining the cash balance. That means having the access to the cash. Please don't give access of both to one person, because you can pass any fake entries. He'll take 100 rupees from you and go home. Please give it to different people. There is a limitation in small entity. Small entity in a very small entity where the owner is come the management. It will be very easy for him to do the fraud because he is having the entire control. In small entities, there will not be many employees. There will be one or two employees. And the entire control will be with the management only. Owner come manager. He can easily do the fraud. So limitation in smaller entities. Any doubts till here? Any doubts till here? Then comes one of the boring part. What is it? Components of internal control. How do you remember components of internal control? What is the key? Cricket match. Cricket match. C R I C crick and M match. Cricket or crick is here and match or M is here. Taken up. Now again, I'd be very honest. Components of internal control is very dry. It is very dry. If you're not able to mug the entire components, I would tell you this control environment wala part mein, there is too much to do RMN. You do it RMN, no need to mug because it is very difficult to mug. If you're not able to mug, do RMN. Rest entities discussion process, please mug it. It is very simple. Control activities is very simple. Please mug it. Monitoring of controls, it is very simple. You mug it. Or it was RMN, monitoring of controls. I think. Take it. We'll start. What is this? Again, do you want a break for 5 minutes? Shall we take a break for 5 minutes? Take it. We'll start the components of internal control. We'll take a 5 minutes break. Online students, we'll take a 5 minutes break. Taken up 5 or 10 minutes break we'll take. It is 8:18. We'll meet at 8:30. 10 minutes break we'll take. Go.